Welcome to the Deep Dive. Today, we're really digging into one of the trickiest, most damaging financial crimes out there. Money laundering.
Yeah, it's this kind of constant shape-shifting problem. We're talking about how criminals, terror groups, even corrupt officials make dirty money look clean.
And the amount of money involved is just staggering. Our sources are talking about $2 trillion laundered globally every single year.
It's huge. That's what, somewhere between 2 and 5% of the entire world's economy?
But here's the part that really gets me, the stat that jumps out. That $2 trillion is bad, yeah, but experts think maybe 90% of all this laundering just slips right through the cracks.
90%. We're barely catching any of it.
So you have to ask why? How is that even possible?
Well, the methods are always changing, you know. They stretch from really old trust-based systems right up to, well, cutting-edge tech we see today.
Exactly. And that's really our goal for you today in this deep dive. We want to help you build a sort of timeless radar for this stuff. To go beyond just the news headlines and actually understand the mechanics, the big cases happening right now, and even how movies sometimes give us clues.
Right. The cinematic blueprints can be surprisingly accurate sometimes.
They really can.
So we'll trace the whole thing from, ancient history through what's happening right now in 2025, this kind of digital wildfire.
Yeah.
And even look ahead to what experts predict for, say, 2030, focusing on the tactics, the scale, and how we try to defend against it.
Okay, let's start with the absolute basics because, you can't spot the crime if you don't know the fundamentals. There are really two types of money we need to talk about.
Right. First, you've got black money. This is the cash that comes straight from crime, corruption, smuggling. It's untraceable, untaxed, dirty money.
And on the flip side?
White money. That's the legitimate stuff. Taxed, declared, totally legal wealth.
So money laundering is just the process, right? The system for turning that black money into white money.
Exactly. It's like financial alchemy. And it usually happens in 3 main stages. This is the classic blueprint.
Okay, stage 1.
That's placement. This is where they first introduced the dirty cash into the financial system. Think bundles of actual currency.
And this has got to be the most dangerous part for them, right?
Oh, absolutely.
Yeah.
Without a doubt. You've got physical cash, banks have reporting limits, red flags go up. It's high risk.
Okay, so if they get the cash in, what's next?
Stage 2, layering. This is where they try to hide where the money came from. It's all about creating confusion.
How do they do that?
Complex transactions, moving money around constantly, often across borders through different accounts, different companies, making the trail really hard to follow.
Got it. Obscuring the source. And the final step.
Stage 3, integration. This is the end game. The money now looks clean, so they bring it back into the legitimate economy.
Like buying assets.
Yeah, buying yachts, real estate, investing in businesses. The money is now usable, spendable, clean.
Okay, let's make this concrete. Histories must be full of examples. Placement. It was a classic case.
You got to go back to Capone, right?
Yeah.
Prohibition era. He used businesses that handled a lot of cash naturally, like laundromats.
So that's where the name comes from.
That's the story. He'd mix his illegal booze money with the laundromat earnings, report it all as legitimate income. Simple, but effective placement.
Okay, so that's placement. What about layering? How did that evolve?
Well, things got much more sophisticated maybe in the 70s and 80s, especially with the drug cartels. They really pioneered smurfing.
Smurfing?
Yeah, it means breaking down large sums of cash into smaller amounts under the $10,000 reporting threshold in the U.S. usually.
Okay.
Then they'd use lots of people mules to make deposits at different banks, different branches, layering through volume and structure.
And they also use these Holland networks, right? What are those exactly?
Hawala is fascinating. It's an old trust-based system for moving money. No wires, no bank transfers involved.
How does it work?
You give cash to a Hawala agent or Hawaladar in one place. They contact a counterpart somewhere else, who then pays out the equivalent amount to your recipient. It all balances out later based on trust and informal ledgers.
So no electronic trail for police to follow.
Exactly. Pure opacity. Perfect for layering.
Which leads us nicely into integration. How does that typically look, especially with these more complex schemes?
The Panama Papers leak gave us a huge window into that. It exposed how shell companies, these sort of fake corporations set up in tax havens.
Right, companies that don't actually do anything.
Precisely. They exist only on paper. They're used to shuffle money around, often using fake invoices for services never rendered. This makes the money look like legitimate business earnings.
And the scale of that?
Estimates from those leaks suggested something like $32 trillion in global wealth might be hidden or laundered using these offshore structures. Trillions.
So looking back, whether it's Capone's laundromats or Panamanian shells, the key was always secrecy, right? Exploiting blind spots.
Right. Totally. Banks were slower, less connected. Borders weren't as transparent. Criminals relied on that lack of visibility, that opacity.
But that's changing now, isn't it? Opacity is harder to come by.
It is, and that brings us right up to today, 2025. It's like a perfect storm for money laundering, but in the digital realm.
Digital schemes. They're the majority now.
Estimates put it at around 70% of all laundering activity. It's shifted massively online.
And the tech they're using sounds pretty scary. It's moving faster than the regulations.
That's the core problem. Digital deceit is the new frontier.
So what are we seeing? What are the main tactics?
Well, one huge area is synthetic identities. Criminals are using AI and deepfakes.
Deepfakes, like fake videos.
Not just videos. Think AI-generated photos, realistic fake documents, even voice clones. They can basically create a person who doesn't exist but looks and sounds real enough to pass online checks.
To bypass the bank's security, like KYC.
Exactly. Know your customer rules. These synthetics are designed specifically to fool those systems. And tests show they're succeeding a lot.
How successful?
In some tests on fintech platforms, these AI fakes got through KYC checks up to 70% at the time.
70%. Wow. So they open accounts with these fake IDs.
Yeah, accounts that are then used instantly for placement and layering, moving dirty money fast.
Are they using real people too?
They are. Combining tech with old methods, we're seeing bots used to recruit actual people as gig mules.
Gig mules, like using Uber drivers or Fiverr freelancers?
Sort of, yeah. They get recruited, sometimes unknowingly, through gig economy apps to move small amounts of money. It's like automated global smurfing, tiny payments, hard to track individually, but massive in aggregate.
Okay, that's clever, but also terrifying. What about crypto? That's always mentioned.
Oh yeah. Crypto is a huge headache. Launderers love the anonymity, especially using things called privacy bridges, like Zscaler snark tunnels.
Whoa, Zscaler snark tunnel. Can you break that down? That sounds complex.
It is, but the concept is, well, think of it like a digital magic trick. Zk Snark lets you prove something is true, like you have the funds for a transaction without revealing any details about who you are, where the money came from, or where it's going.
So complete anonymity for the transaction.
Pretty much. It scrambles the trail. It's perfect digital layering. And we're talking big money estimates are over $1 billion a month is being tumbled through these privacy tools.
$1 billion a month just through those tunnels.
Yeah. And there's another twist emerging. Asset laundering.
What's that?
Instead of just moving cash, they're converting black money into digital assets. Maybe buying NFTs that represent, say, green bonds or virtual real estate in metaverses like Decentraland.
Okay.
Then they trade these assets in the virtual world. The integration happens digitally, and eventually they cash out the clean value of the asset offline.
So the metaverse becomes the new laundromat.
In a way, yeah. A very sophisticated one.
Given all this, law enforcement must be playing catch-up constantly. What are some of the big busts we've seen recently, say, in 2025 so far?
Well, Interpol's Operation HACHI-6 was huge. They recovered something like $439 million.
Wow. From what kind of crime?
Mostly cyber-enabled scams, voice phishing, those awful romance cons. And it spanned 50 countries, which just shows how global this is.
50 countries. And what about specific methods being busted?
Look at the Singapore $2.2 billion scandal. Huge case, 10 convictions, massive assets frozen.
How did they do it there?
It was a mix. They used fintech platforms, likely with mule accounts, combined with very fast real estate flipping, buy luxury property, sell it quickly, classic layering and integration, just supercharged with digital tools.
And property is still a big factor elsewhere too, right? Like in Canada.
Oh, definitely. The Vancouver real estate situation is a prime example. Estimates are over $100 billion washed through Canadian property.
$100 billion. Where's that coming from?
A lot of it is allegedly linked to Chinese underground banking networks, facilitating transfers, some tied to fentanyl profits. It shows that old school method property is still potent, especially when mixed with modern fund transfers.
And it's not just property or drugs, right? What about fraud?
Absolutely. Just look at the U.S. health fraud cases. The IRS recently indicted 11 people connected to maybe $10.6 billion in fraudulent Medicare billing using shell companies.
So across all these cases, Singapore, Vancouver, U.S. health fraud, is there a common thread in the how?
Yeah, there really is. The analysis suggests about 80% of these big modern cases rely on that combination. Shell companies for the paperwork illusion, paired with either real estate or crypto for the actual layering and integration.
So the tools get fancier, AI, crypto, but the underlying disguise, the fake company, is often still key.
Exactly. The delivery might be digital, but the mask is often still that old corporate structure.
Okay, so if the methods are so complex, how can we, learn to spot the signs? This is where you mentioned movies, right? As a kind of decoder ring.
Yeah, it sounds fun, but seriously, some movies are like forensic gold mines. They don't just entertain. They often map out these laundering tactics really well.
Okay, let's try it. Can we use movies to illustrate those 3 stages again? Placement first.
For placement, the movie Casino is perfect. You see the mobsters literally skimming cash off the top in the count room before it's officially counted and recorded.
Right, taking the untaxed profit first.
Exactly. They box it up, send it to the bosses. That skimmed cash is then placed back into the system as seemingly legitimate casino earnings.
Or even simpler, Scarface, right? Just Tony Montana trying to stuff bags of cash into a regular bank at the start. That's raw placement.
Raw basic placement, yep. Before layering complicated things. Now layering. The Shawshank Redemption has a brilliant example.
Andy DeFrest.
Yeah. He's laundering the warden's bribe money. He creates a fake identity, Randall Stevens, and funnels the money through multiple accounts and investments.
Creating distance and confusion.
Pure layering, creating aliases, complex transactions, and the Wolf of Wall Street, remember them smuggling stacks of cash, banded bills, onto a yacht to get it to Swiss banks?
Physically moving it offshore.
Classic layering tactic. Get the money out of the jurisdiction, hide it behind Swiss bank secrecy as it was then.
Okay, placement, layering. What about integration? Seeing the clean money appear.
Ozark is basically a masterclass in integration. The Bird family uses cash businesses, the resort, the casino boat, even a strip club to watch cartel money.
Making the drug money look like everyday business revenue.
Exactly. It's integrated into the local economy as legitimate earnings. Or think about Tower Heist. The Ponzi schemer hiding his stolen money by, gold plating a Ferrari.
Yeah, turning stolen cash into a luxury asset flip. Hiding it in plain sight as an extravagant purchase.
That's integration, converting the illicit gains into tangible, seemingly legitimate assets.
Is there a good movie example for the digital side? Crypto laundering?
There's that movie Dope. These teenagers accidentally get involved with drug dealers and end up using Bitcoin.
How do they use it?
Well, they use Bitcoin's anonymity, or perceived anonymity back then, for placement. Then they used the dark web for layering, and finally they integrated the money by trying to launch a legitimate tech startup with the proceeds.
So art really does imitate life here. These movies are like training manuals sometimes.
They can be, yeah. They show the logic, even if dramatized.
Okay, so we've seen the past, the present, even the movies.
Yeah.
What about the future? Looking ahead to, say, 2026, 2030.
Well, the forecast is intense. Laundering is expected to keep growing, possibly exceeding $3 trillion annually by 2030.
$3 trillion.
Which is why there's this massive anti-money laundering, or AML, arms race heating up. We're talking maybe a $75 billion market for compliance tech.
So what new tricks are criminals expected to pull out? How will they evolve?
We expect deepfakes and synthetic IDs to become even more sophisticated, using things like Jan's generative adversarial networks to create ultra-realistic fakes.
Making it even harder to spot the fake accounts.
Yeah, the prediction is these Jan-forged IDs might bypass KYC checks over 70% of the time consistently, leading to maybe a 10-fold increase in the scale of mule networks, both human and bot.
A 10x scale-up. Wow. And crypto, those privacy bridges.
They'll likely get better, faster. Predictions suggest they could be tumbling $2 billion a month soon. And look out for DeFi, decentralized finance, becoming a bigger playground. Plus, there's quantum computing, potentially breaking current encryption down the line, though that's further out.
And what about just everyday transactions?
That's a huge predicted shift. By around 2028, simple e-commerce payments and mobile peer-to-peer, P2P transfers, think Venmo, Zelle, stuff like that, could account for maybe 60% of laundering vectors.
60%. Through tiny phone payments. How?
Volume. Millions of tiny, seemingly innocent transactions automated, flying under the radar, micro-laundering at scale.
That sounds almost impossible to track manually. So how do regulators fight back against that?
Technology is the main answer. That AML market growth. It's driven by AI. Real-time AI agents are expected to automate maybe 80% of routine compliance work, sifting through those millions of P2P transfers. Companies like Moody's are already pushing hard on this.
Using AI to fight AI-driven crime.
Essentially, yes. And there's a potentially massive game changer on the horizon. CBDCs, central bank digital currencies.
Government-backed digital money.
Exactly. Since it's issued and potentially tracked by the central bank, the projection is that CBDCs could allow tracing for maybe 90% of money flows by 2030, if widely adopted.
90% traceability. That would be revolutionary.
It really would fundamentally change the landscape. And if that happens, alongside better global cooperation, which is also predicted, then the recovery rates for laundered money could jump significantly. Right now, it's abysmal, like 0.1%.
0.1%.
Basically nothing.
Right. But the hope is, with CBDCs and AI tracing, that could rise to maybe 20% by the end of the decade. Still not great, but a huge improvement. Moving from just detection to actual structural tracing and recovery.
Okay, so wrapping this all up, we've gone from Capone's laundromats to AI deepfakes and quantum threats. What's the big picture for you, the listener?
Well, we've seen how the core mechanics are timeless, right? Placement, layering, integration. History teaches us that. The what stays the same.
But the how keeps changing. The present demands we get way better at real-time detection, especially for these digital layers. And the future? Well, it requires foresight, especially about new forms of money like CBDCs.
So the key takeaways for you, it sounds like critical thinking is crucial. You need to look closely at money flows, not just obvious criminal ones.
Absolutely. And question things. We even see complex political funding questions pop up now, like the Act Blue donor situation mentioned in some sources, where concerns were raised about huge numbers of small, potentially untraceable donations. Could they be straw donors? Foreign influence disguised as grassroots support.
Right, so it's not taking sides, but just applying that same scrutiny. Where's the money really coming from? Audit the chain, demand transparency, whether you're investing, donating, or just observing.
The methods get more sophisticated, so our vigilance has to match that. It needs to be just as agile. AI and tracing tech offer hope, but they need to be deployed effectively.
It really feels like the speed of adaptation is everything. If criminals are already leveraging AI and looking toward quantum, we can't afford to be slow. Which brings us to our final thought for you today. Thinking about this $3 trillion future problem. If the bad guys are using these advanced tools, then vigilance, active vigilance, isn't just a good idea, is it? It's basically the price of security. Treating it as anything less, that's falling behind. Stay informed, stay critical.